Okay, this is Module 3, Beyond the Financial Statements. And in this module, we're looking at the importance of the non-financial information because it's an opportunity to reflect the value added by cooperatives. So we're going to review adherence to the 7 principles of cooperatives and introduce some of the performance reporting frameworks. And we'll consider how cooperatives can reflect the community and or environmental impact of their operations. So, non-financial performance reporting and the various frameworks, there's quite a few of them out there. We're going to focus on 3 of them right now today, and International Integrated Reporting, Reporting 3.0, and Accounting for Cooperative Transformation. And we're going to describe how cooperatives can understand and promote the work that they have done or possibly could do in the future in their communities and environmentally. So it's important to tell the cooperative story using the 7 principles. In fact, cooperatives and credit unions can really portray what they're doing by framing their operations in terms of key performance indicators. Many not-for-profit or for-profit enterprises also use KPIs, key performance indicators, in their annual reports. And if you look at TD Bank, that's a prime example. And I think they do a really good job at discussing their impact on their community. So cooperatives should also take advantage of the same opportunity and consider how to differentiate. So one way to differentiate the non-financial KPIs is to start reporting on the 7 principles. A few do, but a lot of cooperatives' annual reports that I've looked at don't really reflect their performance through the 7 principles. But the interesting thing is, in most annual reports that I've looked at, you can find information that can correlate to the principles, but they just don't frame them that way. So the non-financial reporting frameworks, it's important to report non-financial information to reflect the value added by cooperatives. There's a wide array of reporting frameworks: Accountability 1000, GRI, Value Added, International Integrated Reporting, R3.0, just to name a few. Cooperatives are adopting some of these newer concepts in integrated reporting, for example, but I think it's important to consider that whether or not these frameworks are really enhancing reporting, or are cooperatives just copying the latest, newest, shiny thing that is being used in investor-owned businesses. And in fact, these frameworks were developed for investor-owned businesses, not cooperatives. So in Canada, Vancity and the cooperators, I would say, are leading examples in terms of innovative and meaningful co-op reporting. And there's a video in this module, an interview with Julia Robbins from Vancity regarding their reporting approach. So it's important to remember these are just frameworks. So co-ops have the option of determining what should be measured and reporting. There are some issues certainly regarding data validity and comparability. You always have to make sure that if you are comparing to yourself over time, in other words, trend analysis, that you're comparing on the same basis. And another issue is when you're benchmarking. So are you comparing yourself to other cooperatives or to investor-owned businesses? Currently, there's really no publicly available benchmark to compare cooperative performance. There are some proprietary benchmarking tools available, but they're not open to the public. So there are some that are open to certain industries, and if they're members and they're paying a fee, they can access some cooperative data. But generally speaking, there's nothing out there that's free and publicly available. And also, in my review of various annual reports, there's certainly been a lack of attention on measuring performance relative to the United Nations Sustainability Development Goals. In this module, you'll see that I'm doing some work with Dr. Danielle Senkel of University of Guelph, and we're looking at integrated reporting at a cooperative and in terms of how the reporting is impacting their thinking. So what is the behavioral impact of this particular measurement framework? So a recent project, I say recent, it's probably 3 or 4 years that I've been working on this, but CARC, which is the Center of Excellence in Accounting and Reporting for Cooperatives, of which I'm the exec director, we have an ongoing project called ACT, and it stands for Accounting for Cooperative Transformation. And ACT is developed by co-ops for co-ops. We're more or less facilitating the process. So our participants in this project, our participants were cooperatives, and they selected 20 indicators that reflect the United Nations SDGs as well as linkages to the 7 principles where it's feasible. So this project, ACT, which is essentially a dashboard that's going to provide cooperatives with benchmark data to help them evaluate their performance in relation to their peers. We've been running a pilot with it with small, medium, and large co-ops operating in both urban and rural areas right across Canada, from Newfoundland to British Columbia. And we've also included a wide array of co-op industrial sectors. So you might wonder how we came to identify the 20 SDGs. So we went and more or less crowdsourced. We identified every metric we could think of or we found from a wide array of sources. So we started off with 400. Then we used 4 criteria to get this down to a more reasonable number. So we looked at each of these in terms of, was it important for the stakeholders? Was it feasible to get this information? We looked at relativity. Did you need one metric in order to calculate another one, for example? And was it sector specific? So that way we got it down to 50. So then we had our project participants, our 16 participants, complete a survey, and they reduced it then from 50 to 25. And finally, we ran a third survey. We wanted to get this number down lower, so we've got it down now to 20 metrics. And the idea of limiting the number of metrics was done in order to make it feasible for small to medium-sized co-ops to participate. If you ask someone to fill in like 100 pieces of information, they simply don't have the time or the staff resources to do that. But 20 is a more manageable number. It's, you know, some of these co-ops are very small and they don't have an analyst that's just there devoted to crunching numbers and filling in surveys, so you have to be mindful of the operational requirements. So another aspect of the non-financial reporting, you're seeing increased attention now on the sustainability aspects. And historically, all these reporting frameworks, whether it be integrated reporting, Accountability 1000, they're all voluntary. There's no, organization that's setting the standards for all businesses. But now what you have is several organizations have been trying to introduce standards around sustainability reporting. So that's kind of contributing really to the fragmented nature of the standards. But over time, there has been a move towards more standardization, particularly for the sustainability reporting. And this has resulted in the creation of an organization called the International Sustainability Standards Board. And that was established in 2021, so fairly recent. Other organizations, though, are still continuing to work to make sure the SSB, International Sustainability Standards Board, to make sure that the standards they're coming up with reflect the realities in other jurisdictions. So there's CPA Canada, Chartered Professional Accountants of Canada, Securities and Exchange Commission in the US, and the European Union. They're all looking at the standards and where appropriate lobby for changes to reflect their needs. So it's not that these other organizations are in disagreement with the ISSB, they just want to make sure that it reflects their reality. So sustainability factors are really becoming a mainstream part of investment decision making. So consequently, organizations are expected to provide high quality, globally comparable information on sustainability related risks and opportunities. So if you're looking at investing in a business or investing in a co-op, you have to think about, in terms of putting a value on that business, or whether it's even a good business for you to invest in, you have to think about, are there any risks associated with that company? Are there any environmental cleanup liabilities that could be out there? Or on the flip side, given the nature of a particular organization, are there some opportunities to take advantage of the increased focus on sustainability? So in terms of the standards, in June 2023, the ISSB issued its first two standards. So one was the general requirements for disclosure of sustainability related in financial information, and the second standard was climate-related disclosures. So in your lab for this module, you're asked to identify metrics or narrative information in your co-op's annual report that reflects or can be correlated with the 7 principles of cooperatives and the 7 United Nations Sustainable Development Goals. So the hint here is prepare in a table format. And also, are there any SDG or 7 principle initiatives that are not reflected in your co-op's reporting that you think could be, and just explain a little bit more about that. So that ends the overview of Module 3.